Okay, what's next? Oh, the epochtimes.com. The Federal Reserve, announces a second rate cut. This is very interesting. I'm going to have to just go to the old QAnon page, even though they haven't posted in over a month now, a month and a half. Waiting for 8chan to come back or whatever. What am I going to search for? Fed plan for? What was the thing? Planned? Not Planned Parenthood. I'll just paraphrase a little bit because I know what it said. First of all, back to the gold question. Do we have the gold? Q says, yes, we have the gold, and the gold will destroy the Fed. Great. Remember, when he said gold will destroy the Fed, nobody asked about that. They just said, do we have the gold? That's it. Q decided, let us let you in on that. Oh, yeah, we have the gold. And guess what? It's going to destroy the Fed, because that's their plan, obviously, which is a good thing. Get rid of the central, privately owned central bank known as the Federal Reserve. The other thing, the Federal Reserve, there was a post by Q that had said, we know their plans to keep raising rates in 2019. We know they're going to do it. And we've already got a plan about it. We know they should be dropping rates, and we are going to deal with it. That's basically what Q had said. And I talked about this more than once prior. That, oh yeah, Q has said this is what they're going to do in 2019. We have our second rate cut in 2019. But I thought Q was fake and a LARP. They don't have anything real to say. It's always fake. No. Because the Fed was already saying, no, we're raising rates now. We're going back to raising rates. Donald Trump's been yelling lately, no, the Fed, what are they doing? They need to drop rates. We should even go negative. So, the Fed announces a second rate cut. And I just sent myself a little note in case I forgot. Is it time to refinance that mortgage yet? Not yet, friends. Not yet. We might be getting back down to the 3% zone, mortgages. Like deep into the threes. Oh, 3.2%. What? 3.2% on a mortgage? Where do I sign up? Again, I think I was around 4.2, 4 point something. I don't know, 4 point something. Which in any normal times, that'd be a pretty good rate, right? But if we go negative rates, like I said in the $250,000 example, you would normally pay more than $250,000 in a 30-year loan because you're paying interest. Typically, you're going to pay at least double, sometimes triple the amount. So you're paying at least $500,000 to $750,000, depending on normal times, normal rates. And I said, look, if you go negative 2%, minus 2% on the rates, I said, just doing this little basic math here, your $250,000 house in 30 years, you will have only paid $167,000. So, why in the hell would you want to pay off your mortgage at that point? Because once you're locked in on that 30-year, rates could go to 5 or 6% later on, and it won't matter. You're locked in. So, anyways, Mr. Jerome Powell dropped rates for a second time in 2019. Shocker. Q told us in advance this was going to happen. The Federal Reserve announced September 18th that it would cut its benchmark federal funds rate for the second time this year and signaled modest adjustments to the rates going forward. Oh, what do you mean modest adjustments to those rates going forward? You mean like another 0.25% here, minus another minus 0.25% there. Next thing you know, oh my God, are we down to 2% interest rates? Oh my God, are we down to 1.5% interest rate? Oh my God, when's negative coming? Guys, I can't wait. The crypto's just exploded. All-time highs have been breached. Oh my gosh, guys. I got something to tell you that I never thought I'd ever tell you. I'm going to go ahead and cash out some of that as if I was going to pay my mortgage off. But I'm not going to pay my mortgage off because I'd be paying a higher price today paying it off than I would 30 years from now just making payments. What kind of sense does that make? Why would I want to pay more over 30 years than I could pay, pay more now than I would be paying over a 30-year time period? This doesn't even make sense. It's like they're paying me to pay my mortgage. That's exactly right. And our national debt, as I've said, could be wiped out with negative interest rates. I don't know of any other solution because it's the positive rates that created our debt. When you print $1, there's a piece of an interest rate, fraction of a rate attached to the damn thing. So when you have that, $1 is printed, let's say 6% interest rate, or even 2%. You have a 2% interest rate. That means 2 cents of every dollar. Where does that 2 cents come from? You only printed $1 for me to borrow. The Federal Reserve lets us borrow the money, right? We borrowed $1 of our own money, whatever. I owe you 2 cents now on top of that, correct? But I don't get to print money. You do, right? Correct. So where do I get the 2 cents from to pay you back? Oh, come back up to our lending window. We're going to lend you another $1 minus the 2 cents. Therefore, you get 98 cents. But on that 98 cents, you also owe 2%. Oh, how do I pay that back? Because I won't have that money. Well, yeah, you just do the same thing we just did. Oh, that's why our debt, no matter who the president is, just keeps going higher. Because of positive interest rates. So what happens if we go negative? And if Donald Trump says, oh, everyone's worried about interest rates, my retirement, he's going to make sure the stock market keeps going higher. And the stock market going higher, there's your answer. You don't worry about interest rates, people. Just invest in the stock market. You'll be fine. That's what he's basically saying. And the negative interest rates will give us massively cheaper mortgages, and it will destroy our debt. And then we'll back whatever comes next, buy gold. That's what I'm getting here with the whole thing with Q and everything else. So I just uploaded this video a second ago about the University of California. It is done uploading, completed. And I need to go ahead and throw a couple of monetization ad points. Actually 3. I'm going for 3 on this one. I'm going big, man. It's a 19-minute video. I try to space my stuff between 5 and 6 minutes per ad. So we're going to go right here, 5:57, insert an ad. We're going to go over here to almost 12 minutes, insert an ad. Almost 18 minutes, insert another ad. I got to get paid around here. I got that college tuition to pay for, son. Actually, no, I don't. We're good. So, anyways, as widely predicted, the central bank cut its target rates by 1/4 point, 25 basis points, to a range of 1.75% to 2% after its 2-day policy meeting. The federal funds rate is a benchmark that influences borrowing costs of all types of loans, including mortgages. What? Including what? Mortgages, auto loans, and student loans. Oh, so all that student loan debt. And if you're at a certain rate, but if you miss the payments, your rates go up. And then you're stuck with the higher rates, and now you got to pay it all back. Again, imagine being able to refinance your student loan debt, your auto loan even, or new auto loans, doesn't matter. And you're able to get these cars that are, again, I can't afford a $35,000, Model 3 standard Tesla or some other car, whatever. I don't have $35,000. Get it financed. Rates are -2 these days, friend. You'll pay $27,000 by the time you're done. Instead of $35,000, and you can get it over a 5-year period, and your payments are stupid low. Look at what your payments are. Holy shit, are you kidding me? No, I'm not effing putting you on, Charlie. Seriously. The statement of the Federal Open Market Committee, or FOMC, reflected the weakness in business investment and trade. Quote, jobs have been solid on average in recent months, and the unemployment rate has remained low. Although household spending has been rising at a strong pace, business fixed investment and exports have weakened, the FOMC statement said. So in other words, well, that's why we're going to drop the rates. They always, as I say, every time you hear anything about freaking anything on the news, it's just an excuse. It's not even a real reason. It's just, well, that's why they had to do it. He can't come out and say, we're an effing criminal enterprise. We were run by the Democrats for a long time, but it didn't matter if the Republicans had power. We had so much power over everything, it didn't matter. We're a criminal enterprise. We got our foot in the door again into 1913. 3 years later, in 1916, that's when the income tax law kicked into effect because we had to help pay for this interest we're going to be charging you guys. And Ronald Reagan did a study. had a study done during his presidency. Where is the income tax money going? The lion's share, massive, almost all of it, or most, it was either all of it or most all of it, was going to the debt. That was it. You know, this whole crowd, well, who's paying for the roads? Who's paying? It wasn't from that. It was not from that. And I'll say this too. How the hell did our country survive prior to 1913? You know, you do remember it's the year 1776, right? We had this big war, independence, right? Remember that, right? 4th of July. How the hell did we survive to 1913? They did try to put a central bank in, then it got removed, and then, okay, they've been trying. And then they finally succeeded in 1913. And then all of a sudden we had income tax. So we didn't have income tax prior to 1913, correct? Same story, 1776, how did we survive? So imagine, and I feel pretty confident, maybe not soon, but at some point, whether it's Don Jr. taking over, you know, Trump's son, one of his sons, let's say, at some point, if the Federal Reserve's going away, I'm pretty certain the income tax is also going to go away. I say that just guessing. I got to be fair. Yes, I say that just guessing. But I think I'm going to be right. So anyways, more interest rate drops are coming. And we might, for the first time, I think for the first time in our country's history, we're going negative. And again, imagine having crypto. All these thoughts we had, we're going to get out of debt, we're going to be able to do this finally, it's the only way out. And then we get this money from crypto. We still get the money from crypto. Here's your bonus, guys, it's time. All-time highs are being breached again, and they're up twice as much as they were last time. Whoa. Oh, and interest rates are negative. Why the hell do I want to pay my house off? Why? I mean, some people, to be fair, I don't know. I mean, I may change my mind, you know, depending on what kind of wealth we're looking at these days when it happens. But just to say, you know what, I don't owe that. And it's off the books. It's off, like it's gone. I own this house now, and I don't ever have to worry about that again. If I die, my wife is good, you know. So I do understand that side of it. But it's going to actually cost you more money to do that right now than it would if you just waited and kept your money. So what you could do, again, in all fairness, let's say you owe $220,000 on this $250,000 house. I owe $220,000. You owe $220,000 right now, correct? Okay, but in 30 years, which you've been paying for a few years, so in another 25 years, you're going to owe actually $187,000, or that's what you would have paid by then, and it's paid off. So you don't actually owe the $220,000 you owe today, or $221,000. Why don't you just set your $221,000 or the $187,000 or whatever in there in your bank account and let it sit? Don't touch it. It's a separate account, and every time your mortgage is due, starting today, it gets tapped out of that account, and you just let it auto draft month after month. The money's sitting there, and it's the amount that you're going to owe in 30 years. You have the exactly amount. You've asked the bank, this is exactly what I'll owe in 30 years. Yep, got it, done. So therefore, you take that crypto profit today, when again, assuming this all happens, you take that crypto profit today, put it in the bank. You're not putting 220 in the bank. You're putting 189 or whatever I said in this example in the bank, and then you draw out of that and make your mortgage payment. That way, if you did die, oh, the money's still in there. Your wife or kids, they're good. You know what I mean? And then, of course, you still got the rest of the crypto, because maybe you want to wait a little longer for cryptos to go even higher, because you recognize the cycles now. You're an OG. You don't get emotional and sell out at the bottom and not get back in. And now you're waiting for even higher prices to come. And it's okay, because your money is still in the bank, paying that mortgage. You're good. That's off your mind now. Or if you're renting, or you've decided, no, I'm just going to sell my house and go build or buy my property with my crypto. Again, you're going to go get a mortgage, right? Well, I was going to pay for it up front. Well, why? Why hand a builder, here's $250,000 for this property and this house I want to build, when you can go to a bank and get a mortgage for -2%, and then you don't owe the $250,000 to that guy in 30 years. You pay the same thing, $189,000 or whatever, whatever the example is, to the banks. What are you doing? They're paying you to buy this house, right? So yeah, put your crypto money aside in the amount that you're going to owe, not 250, but the 187. Do the same thing again. Like go get a mortgage and then set the money aside in a separate account and say to the mortgage company, draft this account every month for the next 30 years. The money's sitting there on standby waiting for you. Not 250, no. 187 or 189,000. What I'll owe in 30 years. Thank you very much. I'm telling you, this could be a real possibility. And then it may not be soon, but things are looking pretty decent. Like, I'm telling you, I think Trump is going to clean house. His family is going to be like a dynasty, I think, when he's done. When we actually see what he's accomplished, and when these criminals go to jail, and we really start building our country back up, which it's already been doing good, but we got a lot of ways, still more ways to go. Anyways, so that's it. Take care.